You're listening to IR Wire. Welcome to our listeners. Joining us today is Mr. Mark Fakade. He is the president and CEO. Mark, thank you for joining us here.
Well, thank you. It's good to be here.
Mark, give us a brief overview of your experience in the mining industry.
Well, essentially, I've been in the business my whole life. My father was a mine contractor and prospector, so I went to university at a fairly young age and graduated in 1986, and I've been involved in mineral exploration ever since.
Why'd you start Hinterland?
Well, we started the company originally as a prospecting syndicate, and our model was as a project generator. And we would identify areas, stake them, and then we would sell them for a mixture of cash and stock to some junior mining companies, both in Toronto and Vancouver. And after a while, we realized that most of these companies were very poorly managed, and we thought we could do better on our own. So in 2002, we took the decision to list the company, and that happened in September 2002.
What will it take for you to begin operations at the Mozart property?
Mozart's an exploration property. The good thing about it is it's very close to Val-d'Or, where we're based. It's about a 45-minute drive. Very easy access. We're essentially drill ready on it. There's nothing else we can do in terms of surface exploration. We contemplate about $100,000 drill program there, which would get us about 1,000 meters of drilling. Our approach right now is to get a partner in there on a joint venture basis, and we're marketing it as a joint venture opportunity at this time.
Mark, are you looking for additional financing for the project?
Yeah, we definitely need financing. Our working capital right now is at about $158,000, and that's enough to keep us going on a corporate basis. But to do exploration, any real exploration in terms of drilling, what have you, we will be looking to do a financing in the short term here.
So how much investment do you actually need to begin mining operations?
Well, we're not a mining company per se. We're an exploration company. Our model is to identify these projects at an early stage. We develop them to a point where they're interesting to a mining company. So that's kind of the niche of the exploration cycle that we occupy. The great part about that is that it's fairly high risk, but the rewards are very good. We're looking for return on investment for our shareholders in the order of 500 to 1,000% if we're lucky enough to tap into a discovery.
Have the exploration holes on the property indicated mining operations there are warranted?
Not so far. We've only done limited drilling on the property so far, and the numbers are very encouraging. Without getting too technical, we're looking at two deposit types. One would be your traditional gold and quartz veins. The second model would be a volcanic massive sulfide, a gold-rich volcanic massive sulfide. And with the airborne surveys that we've done, the ground geophysical surveys we've done, and the limited drilling we've done, all the indications are there. It's a fairly big property. We're looking at almost a 6-mile or 10-kilometer strike length to the prospective horizons, and our main problem right now is zeroing in on the most favorable part of that extent. And to that end, we've identified about 10 or 11 prospective areas, which would be drilled in an upcoming drill program.
How much does a mine have to produce to break even?
Well, that's a really good question. It depends what commodity you're talking about, and there's so many factors that come into it. What we really like about the Abitibi region here in Quebec, where we're based, is the infrastructure is superior. There's roads all over the place. There's quite a number of operating mines. There's very good expertise in terms of drillers, geologists, engineers, consultants, assay labs. So to answer your question, I would say it's much easier to bring a mine into production in this part of the world than, say, up in Canada's Arctic or up in Alaska or overseas in some of these like Africa or South America, where the logistics and the infrastructure just isn't there.
How long does it usually take to bring a new mine online?
Typically, from the initial discovery to commercial production, you're looking anywhere from 6 to 10 years. It's again, it really depends on the jurisdiction you're in, and Quebec again is a very good jurisdiction for that. The permitting process is quite streamlined. We have good social license in the areas that we work. We work principally in northern Quebec, where there's a lot of indigenous communities, and the relationship with the primarily the Cree Nation is very good with the mining industry. Ideally, a mine should go into production within 10 years. If it takes longer to put it into production, then there's something technically wrong, or there's something wrong on the permitting side. And again, Quebec is a very favorable jurisdiction, and that's why we've decided to concentrate our efforts here in Quebec.
The exploration budget for 2015 was conditional upon obtaining financing. Were you unable to obtain that financing?
Yeah, 2015 was a complete train wreck for not just Tinterland, but for the junior exploration industry in general. We saw a sharp downturn in the level of exploration activity and financing starting in 2011, and we're used to the ups and downs of the mining cycle, but this one has been very long and drawn out. Normally, we look at a downturn being 12 to 18 months, but in 2015 we were still in it 4 years on, and to some extent here in 2016 we're still in a downturn. It's hard to describe what it could be, because the commodity prices are actually quite healthy. Gold is fairly stable. Copper and zinc are actually up. The nickel price is very good, and then we've got some of these newer commodities like lithium and cobalt and things like that are sort of adding value to the commodity mix. But despite all that, we're still finding it difficult as an industry to locate the necessary financing to advance our exploration projects.
Have you explored activities demonstrating enough potential to merit additional financing?
Well, without a doubt, two of our properties, Mozart, which we've discussed already, and then Guy Berry, our second gold property in the Abitibi, those are both drill ready. We've done all the necessary groundwork, and we've identified very, very high confidence drill targets. What we're concentrating now on is some newer projects. We just got involved in the lithium space here in June of 2016. We acquired two properties. We've kind of narrowed it down to one, which we call Troilus. Troilus completely surrounds an existing deposit, and the little work that we've done this year, the results are very encouraging, and there certainly seems to be a investor appetite for lithium projects. So that is what we're focused on. Our budget for that program this year is $200,000, and we'll be looking to raise that money in the short term. Our second new project is in the James Bay area, which is in sort of the mid-north of Quebec. And there's been a lot of exciting discoveries there this year, notably Sirius on their Chichu property. It's also the region where Goldcorp has their Eleanor deposit, which is producing at the rate of about 400,000 to 500,000 ounces per year. It's a new discovery in 2003, 2004. Very quickly went into production. So we've staked 4 properties in that area. All have very good potential, and they're early stage at this point. We haven't done any work on these properties, but we're gearing up to have a large exploration program there for the summer of 2017.
So then how do you select a property for investment and exploration?
Well, it's a little bit of both. We're sensitive to what the market is looking for. So we traditionally we're a gold company, and we've also been involved in base metal, copper and nickel exploration, as well as platinum and palladium. Lately, lithium is a very hot commodity, and Quebec has excellent geology for that. So we've been focusing on the lithium. We started our research towards lithium in January, and settled on this Troilus property in October of this year. So that has a lot to do with it. We look at things that we think we can finance. We're also really big on infrastructure. Essentially, if there's not a road to it, then we're really not interested. The cost of helicopters and fixed wing aircraft is just too harsh on a small company in terms of financing. So the commodity focus, the infrastructure question, and then once those are answered, then we start looking at the government database for geophysics, geology, geochemistry, that sort of thing, and then we select properties based on the technical data. So it's kind of a sort of a three-stage approach to the problem of acquiring exploration properties.
So surely we'll keep an eye out for Hinterland Metals. Mark, thank you for joining us here at IR Wire.
Okay, thank you.
Our featured guest has been Mr. Mark Fagerty. He's the president and CEO at Hinterland Metals. Hinterland Metals currently trades shares on the Toronto Venture Exchange on its ticker HMI.